happening? This is Colin Andrews Egbert, and this is Buying Boring, as they say, but beautiful businesses. And today we have one of my first advisors when I decided to kind of pivot from just looking at self-storage to looking at the big, beautiful world of businesses outside of storage. Michael is one of those folks that I reached out to, and just with his wealth of knowledge, just was an amazing contact to have. And so I wanted to share a little bit of that wealth of experience with all of you that are watching this today. And Michael, great. Thanks for joining us today.
Glad to be here, Colin. Thanks for having me.
Absolutely. So if I asked you, to share a little bit about yourself, you're a humble guy, so you wouldn't share what I'm going to share about you. So I'm going to lay out a few things. You feel free to correct me if if anything, but
no worries.
a couple of the highlights. You are CEO, CIO of MC Enterprises, and you've done a ton of things, but right now what you've been really working on is deploying capital and operations experience to acquire small and medium-sized SMB, small and medium-sized businesses. And what you've currently been focusing on is Rezy Services LLC, which you have a multiple plumbing and I believe also HVAC businesses as well, multiple portfolio of these businesses that you've bought and that you're growing. You also have quite a bit of real estate experience, got your chops in that as well, built $600 million apartment portfolio in the Southeast. You also have experience with finance, private equity, over 30 years with Price Waterhouse, Security Pacific Bank, as well as your own family office. Your acquisitions and investments, you acquired and financed over $2 billion in real estate deals, multifamily, commercial, single family, and $500 million in venture and private equity investments. And one of the big things that you're doing now is advising other folks, helping other people out. You're starting to create content, podcasts. You're going to be developing a book, which we'll talk about. I can just tell that you've kind of gone from that, I want to do everything myself in the operations, to more of like, how can I be the guy that helps kind of guide things and kind of, as you mentioned earlier, that you can either solve with a decision or a check or both, right? So Michael, anything that I missed that you'd like to that I missed out on that you're also have done or about right now?
A lot of battle scars along the way, Colin. I'm sure we'll get into some of that. Thanks for that very nice introduction.
Absolutely. So Michael, let's jump right into it. You have gone from like a real estate focus, much like me, but you kind of made that switch years ago to kind of look at other businesses as well outside of real estate. What kind of made you decide to switch from a focus of real estate to going into buying these quote unquote boring businesses? What was your thought to go that pivot?
Well, probably from I think you share the same belief that there's nothing boring about cash flow and doing well. So whether it's real estate or businesses, sometimes it's opportunistic and strategic, right? So I've been in real estate, both development and acquisition and some syndication going back 25 years, as well as buying businesses during that time. So I was always doing both. And part of that was a belief that, there are two great asset classes. At various times, one's better than the other, but you should always kind of be around both of them. And I did that and probably focused heavily, as you mentioned, on the apartment properties where I had an invested thesis coming around 2011, 12, 13 that, hey, migration from north to south, I should buy apartments, and start doing that and end up with about 30 properties and 5,000 plus units with some partners. So saw that turning, had already built up my own plumbing and HVAC business servicing the apartments, and decided this was going to be better to sell picks and shovels to the miners now and get out of the mining business. No more gold mines.
The pickaxes and the shovels. Yeah. Okay. Got it. So you already were doing kind of your own repairs. You almost had your private plumbing company managing and taking care of all the repairs on your real estate. So you said you already kind of had the chops for it. You already were running plumbers and HVAC guys for your business. And so you just it was just a natural progression. That's kind of what led you to that. It wasn't, some other way, or that you got a great deal on an HVAC company. It was kind of based on what your experience was through real estate.
That and then just, I'm trying to always think in kind of a 5-10 year cycle of, okay, what over the next, I thought, coming out of the great financial crisis, real estate with interest rates really low made a lot of sense. I did not think rates were going to come back like maybe some others did. So as I started selling off the portfolio, and thinking about it, plumbing, HVAC, restoration services, all these things are going to stay around for the next 10 years. AI is not going to disrupt it. They're great businesses to have. You have a retiring owner group that's going to be selling them. And so, why not focus time and capital on that and build up a platform to kind of cross sell and do what we do.
Got it. And what has been kind of the challenges that you've had with the growing of the plumbing and the HVAC businesses? What are some of the pitfalls that you've experienced?
Every business has its challenges, right? And even though we understand plumbing, for example, commercial plumbing is very different than residential plumbing. Even the plumbers themselves oftentimes are different, and the new construction's different than the people that do the repair work. So you quickly start to find out that there's challenges with each one. And I did not know the residential side that well because we hadn't done any work on residential homes for plumbing or HVAC or anything at that time. So that's been an experience, just understanding how the leads, the marketing, the service, the techs, and how that whole ecosystem's working has been an interesting, challenging but rewarding time learning that.
Got it. And, they say that once you find and buy a business, that's when the real fun starts. When it comes to the operations and really kind of taking what you've done is, you have a platform business and now you're buying other businesses that are a lot of times $1 million. As you mentioned, what are some of the things that you see with these businesses that aren't the $5-10 million plus businesses, but are a little bit smaller? Are you having to have some operational difficulties when it comes to the tech side? I think you mentioned one of our conversations, you had a company that had a fax machine, for instance. Is it tougher with these smaller businesses that you're buying to optimize them, to get them to the standards, because a lot of them are owner centric and they don't have the necessarily the systems in place?
Yeah, it's a great point, and that's why I think most searchers and acquirers are looking for larger businesses, so they have systems and management in place. They're going to pay up a lot more for those businesses. My philosophy has been build the platform around it or borrow it via a franchise or something, and start bolting it on with some good people, and just keep the price multiples down a little more on the lower end of the range, so that we're comfortable doing these. We'll unplug the fax machine and start doing marketing. Like the company we just bought in New York, been around 21 years. They haven't done any marketing in 10 plus years. So they just let the phone ring from 3,000 accounts. So we're going to expand the operation and start doing what we do with leads and putting in a CRM system and running different campaigns. So we're getting started with that already.
Got it. Now, you've also done some startups as well. Is that correct? You haven't just bought, you've been involved with both sides of it. What would you say is the main benefits? Like if they don't really have recurring revenue, if they're more of, with plumbing, it's, they need it done, or if it's commercial, they're doing it for new construction, as you mentioned, that, commercial and residential are two very different things. When you are buying a business, as opposed to the people I say, why don't I just start it and I can just, ramp it up and I can keep the overhead low and I can, the startup cost is, me going out and getting a truck and hiring, my first guy to do it. What do you see as the benefits, especially if it's, one of the smaller businesses, not something that has a huge team and all of these systems and operations and management in place? What do you see as the benefits of buying versus starting up these companies if they're not, huge in regards to the systems and to the processes as well as the cash flows?
Yeah, it's a classic question that everyone's talking about. Even today, it's become very popular to, ETA, buying through acquisition to be an entrepreneur. I think that's all great. It just depends on the deal. It's very situational, right? So if you have what you're buying, in my opinion, what you're buying in a business, if you buy a sizable one, is product market fit and a team and a structure to go with it. You're going to pay a lot for that if it's a really good business. Most times, again, there's always exceptions. And sometimes, if you know the market well and you have that ability to launch with an ability to solve a problem, because usually that problem becomes your opportunity to solve. And if you do that, that's where your margin and all your returns come from. So if you can solve it, the market rewards you, and you can start with sales and you can start with customers, you can put the rest of it together. I think that makes a compelling argument to sometimes start something in a business you know well. Do I recommend people start a business if they really don't come from that business? Then the answer would be no, because you're gonna pay a big learning penalty on everything that you're gonna have to make mistakes on before you figure out the right way to do it. That's not a good idea. So I think it's, generally speaking, better to buy if you can find the right thing, but I'm not against starting if you have some competitive advantage that you can bring to it.
Got it. And what do you see as some of the biggest mistakes that people, because you're now going to the advisory role, you're helping folks, to helping holding their hand, getting through their first deal or an approximate another acquisition in the future. What are you seeing as the mistakes that you see people make, and what are the things, as with you being an advisor, that you kind of help them avoid?
The mistakes that people make, kind of like people in general, they come in all flavors and sizes and everything else. I think ultimately most acquirers will find out that they didn't know everything going into the deal, and it happens to all of us like this. So there's no getting around this. Whatever due diligence you think you're doing, unless you're already in that space and know it well, and you're doing an add-on acquisition, then I think it's a little different. But the first time you step into the business as the owner, that first week is always interesting. People quitting, things coming to the surface that no one talked about in due diligence, and people grabbing you in the hallway and saying, I really wanted to tell you this, but I couldn't. They wouldn't let me. But our biggest account just gave us notice, and they're not going to buy from us anymore, or something. Like, these things actually happen. So you just have to be ready for that. And if people don't have the working capital and the grit and the perseverance to see through that initial challenge, then I think that's going to be a little unpleasant for them. So I think just getting yourself prepared financially and emotionally, even just to say, like, I know this is exciting, I bought this business, but it's going to be a lot of work. And anybody who thinks this is passive income really doesn't own anything yet.
Got it. Well, speaking of passive income, one of the things that I'm looking to do is to be a matchmaker, take folks who want to be a limited partner. They don't want all the operational challenges. They don't want to sign their name to a loan. They want to, invest something. They want to learn. They want to get a front row seat as a limited partner, as a minority equity investor. For somebody like that that's coming in, that wants to invest 50, 100K, start to learn the small, medium, and business sector, start to kind of get an idea of what it takes, but without all the responsibilities and the risk. What would you say to somebody like that, as far as what should they look for when it comes to a deal that they're looking to invest in?
Yeah, it's great. And I've talked about this. I think you're really going to do a great service to a lot of people, because in my opinion, the majority of people that say they want to buy a business probably should not, because they're not financially, structurally ready for it. Doesn't mean they shouldn't have what I call ownership stakes, right? So everything's to me, about you have to own things today. If you're just working for somebody else, they in essence own you, and they're leveraging your work productivity to earn a profit. But by starting to diversify and at least take minority stakes in businesses, you're now an owner. You might only be 1%, 5%, 10, whatever, but you are an owner. And that compounding starts to take over and help you. And I really believe that is a great way for most people to both start the journey, but also sometimes just run with that's their diversification, is they should be investing in small business. Like, people think of the S&P 500. What is that? That's a collection of businesses you're investing in. You have a small ownership stake in a lot of public companies. These are statistically, great returns that have been historically doing it. And if a business has been around, 10 years, 20 years, and you're taking a small stake in it, chances are it's gonna be around. It's gonna do pretty well. And then the data backs that up. There's studies that people can look at. The Stanford study on search, they do every year or two, and the returns that the limited partners have had coming from that, they beat private equity. It's, it was over 30%, as I recall. So I think it's a great opportunity. I think people should look at it, and most people should do that, at least as the default. And then if they're comfortable, they have enough capital, they've learned, or they just want to own it, then go for it. Buckle up. It's going to be a ride, but it'll be a good one.
Excellent. Well said. And what have you seen when it comes to folks that are investing in these type of businesses? Which industries, what sectors have you seen? Obviously, you believe in home services. What other areas besides home services do you like?
I like businesses that have less technical risk to them than others. Most businesses fall into certain categories: B2B, B2C, capital intensive, not capital intensive, and you can make cases for each one. Generally speaking, you want to avoid capital intensive businesses, but there are times that you can leverage it and actually do very well, and it creates a barrier to entry to everyone else. Very hard to have one rule that you just follow in this if you're looking at it, but it really comes down to, I think, finding a business which, as Buffett would say, has a moat around it. Like, is it protected? Has it been around for a long time? Is it going to continue to be around for a long time? And a good example of that is I'm looking at a quarry that's the only quarry that services about 200 miles in any direction. Pretty hard with the permits and all to get another quarry anywhere around. So it might be an interesting business to kind of look at as an investment, at least, even if it's not something I'd want to buy entirely. So I'm looking for that moat that protects that cash flow, because that's ultimately what you're doing. So back to your specific question, I do like plumbing and HVAC and all the trades. I think there's other businesses, including some online businesses, that have some protection to them. If you're just selling through Amazon, I'm a little leery of that. But there are some great small SaaS companies. There's some great businesses folks have created that I think would be great for someone else to take and try to move it to the next level.
Excellent. And when it comes to, and if you can, just take off the humility hat for a moment. When it comes to goals, when it comes to like what you see your business doing, if you can kind of tell that, every business has a story, has a movie, as they say, as far as you have the start, you have the beginning, and you have the ending. Can you kind of share, like, when it comes to the numbers, like how much you've invested in these plumbing companies, where you look to grow them, what would be kind of like an exit? Do you have something like that in mind as far as like what the end goal is? Is it to just hold on to them and just cash flow them for, indefinite period of time, or what? Tell me, what is your strategy when it comes to the exit?
I mean, if I could be in any 0.001% range of a Warren Buffett and his thinking and his success, that's what I'm looking for. The podcast that I'm doing, Permanent Equity, in the book and writing else, all about compounding and cash flow continuing. So if I can find the right company like that, and I think I have that in Rezy Services, I see that as a long-term hold. Doesn't mean it always happens. Sometimes you do sell things and the right price comes along. But my ultimate goal is to get to 100 million in revenue, 20% EBITDA, and sell half to my employees and all my techs in the field, and continue on with them as my partners. That's my goal. So people come on and they're recruited to my business that we're working together. I was in Atlanta last week and talking to our techs and showing them where retirement's going to be if we can achieve these things together. Because if I can get everyone to act like an owner, that's when I know that the business has a high probability of success.
Got it. So instead of just holding on to it all yourself and being, quote unquote, the greedy business owner, you're actually flipping the script on that and saying, I'll have more success in the long run, and my businesses will have more longevity and more of a legacy if I incentivize the people that help me create it.
Yes. And there's been some other great examples of some folks that have done that and created it. And there's, as I'm sure you'll be able to find, someone can talk about the ESOPs and the tax advantages that you can sell tax-free and deduct the principal and all these great things. The government really encourages employee ownership. And I've seen the statistics, employee-owned businesses do perform better than non-employee owned businesses. I think it's a great goal. It's one that I'd like to see happen over the next 3 years, and that's what we're working hard to do.
Got it. And one of the things that your book that you're getting ready to release is the focus is really 45 and above aged individuals who are looking to purchase or invest, get involved with their first small or medium-sized business. Can you kind of share why it is that you chose that age group? What's the reason behind it? And what are some of the things that you think that are on the minds of people that are this age? Obviously, they're getting closer. I'm now can say that I'm a part of that group. On the
Welcome
lower
to the
side,
club.
but
Welcome to the club.
no doubt. Thank you very much. Thank you. So what are, I mean, I know in my mind, what are some of the things that are important, but what are you seeing as a collective, some of the things that they are thinking of, or that's important to them, or that things that you're really trying to stress to convey to these people, as opposed to somebody that's, right out of college and, trying to do their first business. And, I've watched a lot of YouTube videos and want to become an entrepreneur. These folks that, we've got some more of the battle wounds, and we got the scars on the back, and we got some of
yeah,
the
for
different,
sure.
the responsibilities, as well as also some of the opportunities. What would you say?
Look, it's a cohort that I'm a part of. It's one that I think has different motivations and challenges than someone who's 20 years younger, that has more time to make a mistake and recover, can bounce around, doesn't have the work experience, but has plenty of energy. And I think that most folks in that 45 to 65 group are thinking about retirement, legacy, their purpose and passion, worried about their corporate job in many, many cases. And it's been extremely difficult for people to replace their income in this. And I think that at a minimum, I really encourage people to look at investing in small, medium businesses, much like you're talking about, Colin. And if they're ready, jump in with a partner or themselves and buy something to give themselves a stable cash flow in retirement, pay at that 3 to 4x range that I recommend. If you do nothing, you're getting a, 33% return on capital. So it really will work. You do have to put in the work, but I think with 45 and up, you've got a lot of experience. You've got a big network. You should have done something in the 20 something years you've been working. So, apply it, and that compounding of your knowledge will generally put you in a really good place over the next 10 years. So retirement is not a scary thing anymore. It solves your problem.
Absolutely. Got it. And when it comes to the baby boomers retiring, those folks that are a little bit ahead of us, so to say, everyone's talking about the silver tsunami and, the huge opportunity and baby boomers retiring every day, and, all of this. Now, you're somebody that, like, you can cut through the hype. You're living it. You're seeing the businesses. You have not just ownership experience with Rezy as a owner of these plumbing and HVAC companies, but you're also advising and also on the brokerage side too. So you're seeing it from a lot of different sides to it. Is that overhyped out? Do you believe that it is as strong of an opportunity as it is, or is it, a bunch of these business buying gurus that are kind of playing it out too much?
Yeah, I told somebody recently, a tsunami wipes you out, doesn't it?
Yeah, right. They probably could come up with some better branding on that, couldn't they? Yeah, right.
Maybe a silver wave that you could surf, perhaps. I'm not a surfer,
Right.
but has it been overhyped? I don't think the statistics are there. They're owned by baby boomers. The age is right. Are they going to give in to their children? That has become not a thing over the last 10 years. Might be a little bit more, as perhaps family members find out it's not so easy to keep that corporate job. But having said that, there's going to be a lot of businesses that change hands. I do think it's a big opportunity. The thing that nobody talks about, though, is that 3%, depending on which numbers you want to use and which study, are businesses that have less than 1 million in revenue. Of that big wave, everybody says, I want to buy a business with an EBITDA of, $2 million. Well, you and everybody else. So you're going to be stepping into it. And if you're a first-time buyer and you're up against private equity firms, family offices, independent searchers, that this is their seventh deal, you're just at a big disadvantage. And if you get it, you have to ask yourself, why'd you get it? Because either you missed something in due diligence or you paid more than the other guys. So I'm not sure that qualifies you as a genius. I think the thing that I think everyone is missing is that you're talking about mostly smaller businesses, many of which don't have an easy way to sell. They tend to oftentimes be local businesses too. So you're going to be buying something in your hometown or within a radius that you're comfortable commuting. And I think that's something that people don't focus enough on. I mean, yes, there's a lot of businesses being sold, but what businesses are we talking about? We're talking about restaurants and hair salons and things in that mix too. So that's not for everybody, but between franchises and this, that smaller business is where most of the transactions are going to be. And that's just got a different set of challenges. You're probably not going to use an SBA loan. You're probably going to use some seller financing and maybe a small bank loan or your own capital, or maybe you go out and raise the capital. And that's probably going to be the structure of the future.
Got it. So you're saying that a lot of these deals, a lot of these businesses that aren't at a level where SBA might see it as a potential a deal that they'd be willing to do because the revenue's not there, that it's not, doesn't have the systems, it's very owner centric, that there's still opportunity there. You just might not be able to use traditional financing, SBA, et cetera, but you just have to be a little bit more creative. However, these owners are willing to normally be more creative than some of these larger companies because they have less suitors. They have less people that are interested in purchasing their business.
Yeah, I think that's exactly right. And, on the business advisory side of what we do, we tell people when you've got a business of that size, you need to, it's creativity in the deal structure that gets deals done. As a buyer, and I bought, I don't know what I'm up to, 40 or 50 companies in my time, I often said, look, you can have your price or terms, but not both to the seller. So you give me a price, I'll set the terms. You give me the terms, I'll come in with a price. And that's really what you're talking about, I think, when you've got the smaller deals, is a combination of what's a fair structure to get comfortable with this more fragile business that you're going to pay out over time, probably some of the compensation, and not going to be an all cash out deal like you're going to see in maybe a $20 or $30 million transaction, where they're going to expect that you're going to the bank or the SBA if it's a little smaller, and mostly doing that. And I think with the new SBA rules, it's getting really difficult for sellers to carry any paper or having signed on the SBA loan. They're just not going to do that. So I look at it as a positive because I think some people were over leveraging and the prices had floated up, and I'm hoping that more rationality will return to the price and structure with and I think most sellers should take some risk in there. I won't really do a deal there's not some kind of seller participation somehow, because there's always something that comes up that you want to talk about later.
Got it. So as opposed to just writing the big check 100% and then they write off to the sunset, tie them in on something on the back end so that if something comes up, or that, they something when it comes to the numbers or the revenue, or, their customer concentration, or something that is that when you actually get the keys to the castle, so to say, that you find out, you're like, hey, you can go back and get them so that they're still invested in the business. They still have their own desire, their own selfish desire to see it be successful because they're still a part of it, is what you're saying.
Yeah, I'm big on aligning interests, right? And if you cash somebody out, your interests are no longer aligned. So if I've given you whatever 60, 70, 80% in cash, but there's still a significant amount that's going to come to you, you're probably going to be a lot more aligned with me, making sure the business works. And you take that phone call, you go to a customer meeting if I need to, anything to kind of help us make sure the employees are happy. It's generally worked out better. And I just caution people, if you're going to cash somebody out, you can do it. It's worked out. I've done that too, but don't expect they're going to answer the phone when you're done. They may be your best friend until the closing, but after that, they've got their money and they generally have moved to Florida, or they're, traveling around and they don't want to hear about their old business anymore. So I think it's a more prudent approach to try to have some seller participation in the structure.
Got it. Excellent. And so, Michael, everything that you shared, awesome. I knew that you'd bring the heat. I knew it, and I hope that all the folks.
Yeah.
No, you did. It's every time that we speak, I pick up something and I wanted to be able to share that at a larger level with other folks. Your time is limited, and so for you to be able to reach multiple people and not just myself with a one-on-one conversation, this is awesome. So I'm going to leave you. I'm going to ask you one last question. So for the minority investor, for somebody that's looking to get started, they want to get involved, they're not ready to take on all the risk, what would be kind of your final thoughts, advice, somebody like that? Put yourself into their place, because you're writing a book about it, right? To how these folks can get involved. They're not ready to take the full step. They don't want to sign on the loan. They have maybe a full-time job. They're making great money, but they're not seeing the kind of exit. They're not seeing the kind of they want to start looking at other opportunities. So what would you say to that individual to give them the best chance of success?
I think it always starts with, invest in yourself first, which means, buy a book or 2 or 3, listen to podcasts, read, be involved, go to meetings. I'm not necessarily suggesting mastermind classes and things like that, which are a whole nother category of what people are doing, but just spend the time to educate yourself and then go into the investment side if that's the route that you choose. And I think Majority of people should probably start that way. It's easier to get in as well. You're not stuck in a search process for a year or two trying to find something. You can go through deals. And I would say a little bit of diversification is a good thing to look at. So if you have some dollars put aside that are in your portfolio of whatever it may be, take a look at investing in 2 or 3 things rather than just one. Don't fall in love with just one thing. Life can get in the way. So I recommend that everybody try to find a couple different businesses, because you're also going to learn from those businesses and those operators. And you never know, you might really like one of them and decide to get into it yourself, or maybe partner up with that operator in a bigger way going forward. A lot of different options. But the number one thing I'd give advice to everybody is get in the game. Get off the sidelines, get on the field, start playing the game, and own something.
Boom. Excellent. Well said, Michael.
All right.
And for everyone, everyone that's listening, absolutely. Everyone that's listening to this, thank you so much for taking time and effort and energy that you're placing. If you're still listening to this, you spent some time with us, and that's saying that you're really taking things you're taking things seriously. And kind of what Michael's suggestion was to start learning, start listening to podcasts, start listening to people that are, a couple steps or half a mile away from where you're at, but you're starting to learn from where people that have had success in this, like Michael. And that's the name of the game, is to, if you pour out your cup like what Michael's doing, so you can pour in other people's, and that's what you're really doing. So it's much appreciated. And as this world, what you throw out there comes back. And Michael, I very much appreciate everything that you shared. And for everyone that is interested, keep on listening. We'll keep on bringing some excellent folks on. We want to make sure that you have the safest, easiest, and the least riskiest way to get involved with small and medium-sized business ownership. So until next time, adios.
All the best. Take care. That's fun.